Hello everyone, welcome to EduTap and welcome to the Finance 360-degree session where we cover all the relevant and important finance current affairs which are important from the exam point of view. And in today's session, we are going to cover a very important circular that has been released by the Securities and Exchange Board of India, and this is a very important finance current affairs also. Okay, so today we are going to have the complete clarity about the important circular that the SEBI has released, that is regarding the short selling. And this is important from the SEBI Grade A exam point of view as well as from the RBI Grade B exam point of view. Okay, so let's get started with the very important circular with the very important finance current affairs, and let's have the holistic understanding of this news article. But before that, do subscribe to our YouTube channel and join our Telegram channel where you are going to get the PDF of today's session, and the link for the Telegram channel is provided in the description box below. Okay, coming to the news article. First of all, the circular has been released by the Securities and Exchange Board of India, and this is for all the recognized stock exchanges, the Bombay Stock Exchange, the National Stock Exchange, and for all the recognized clearing corporations and all the depositories. Okay, that is the CDSL, the NSDL. So for all the depositories, this circular has been released. So whenever a circular is there, whenever a press release has been released by the RBI or by the SEBI, if it is important from the exam point of view, if the notification has been released, if it is important from the exam point of view, you should know the applicability, that on which entities the press release, the circular or the notification is applicable on. Okay, now coming to the news article. SEBI has tightened the short selling rules. So the SEBI has released this circular in which the SEBI has informed that all the investors across all the categories will be allowed for short selling, but the naked short selling will not be permitted. So what is the meaning of short selling? What is this naked short selling? So let's understand that. So starting with the idea of short selling, this means that selling a stock which the seller does not own at the time of the trade. So what does this mean? Short selling, first of all, the investor does not own the stock, but the investor is selling the stock. So this is short selling. So let's get to this picture and let's understand it. So short selling happens when the investor expects that the prices of the shares are going to go down. Okay, then the short selling happens, that in the future the prices of the shares are going to go down. So here the short seller or the investor borrows the shares from the broker. Okay, broker, Zerodha, Grow or the IND Money, they are the brokers through which we do the trade, through which we do the financial trade. Okay, the trade in the financial assets. So the short seller or the investor borrows the shares from the broker for a small fee that the short seller is paying to the broker for borrowing the shares. Okay, now the short seller has borrowed the shares. The short seller is selling these borrowed shares in the market. So the short seller sells the borrowed shares at the current market price. Let's say current market price is rupees 20 per share, and the short sell has happened of 200 shares. Okay, now the shares drop in. The short seller is expecting that the shares will drop in value, the price of the shares will drop, and actually what has happened that the next day or the day after tomorrow, what has happened that the value of the shares actually decreased to rupees 10 per share, and when the price of the share decrease, then the short seller will buy 200 shares and will give this shares back to the broker from which the short seller has borrowed the shares. So the short seller buys back the same number of shares at the lower price when the price decreases and pockets the difference. The short seller transfers the newly purchased shares back to the borrower. So the whole system, what is happening, that the short seller or the investor is borrowing the shares and selling the shares in the market at the current market price. Now the short seller is expecting that the price of the share is going to go down in the future, tomorrow or the day after tomorrow, and when the prices actually go down, the short seller actually purchases the shares and give back the shares to the lender. Okay, to the broker here. Broker is the lender here, that is lending the shares to the short seller. So this is the idea of the short selling. that when you are convinced that the price of a stock or the share is going to go down, is more likely to fall in value than rise, you can send a short order to your broker. Short order means that your broker will understand that you need the shares, you need to borrow the shares or the stock. So your broker will lend you some shares of that stock and sell them on your behalf. And then after lending the shares, when you have borrowed the shares, the shares will be lent out, okay, will be sold out. The shares will be sold out. You gained cash from the sale. So you have gained the cash from the sale, like you have sold out the borrowed shares, you have gained the cash from the sale, but now you have a debt obligation that you have to return the shares to the broker. To repay the borrowed shares, you have this debt obligation. So as soon as the prices go down, you will buy. Over time, if the stock really falls, the price drops, you will buy the shares back at the less price. The same amount of the shares you will buy, and you will give this bought shares to the lender that has lent you the shares. Okay, here what you are doing, you are actually taking a very big risk, because on the anticipation, on the belief that okay, the prices of the shares are going to go down. So on this belief, what you have done, you have borrowed the shares and you have sold these shares. But what if the prices actually do not go down? Then at the higher prices, when the prices are higher, you have to buy the shares, because you at some point of time, like on some particular date that is written on the contract or that you have told to the broker, on that day you will have to return the borrowed share, right? So even if in the future the prices are going to go high, then also you will have to return the shares to the broker. So this is the idea, that you are taking the risk, and that's why you are, like, if the prices actually go down, you are going to earn. Okay, so let's understand this clearly. Like, you are borrowing the shares from the broker on the expectation that the prices of the shares are going to go down in the future. So you are borrowing the shares and you are selling these shares at the current market price. Okay, now when the prices in the future actually go down, like tomorrow, day after tomorrow, before the date that has been mentioned, on which day you have to actually return the shares to the lender. So before that day, when the prices go down of the shares, you have to buy the shares to give it back, to return it to the lender. So let's say you have sold per share for rupees 20. Okay, you have sold the share for rupees 20 per share, but when you buy it at rupees 10 per share. So here what is happening? The difference is your profit. Okay, so this is the whole idea. Now coming to the naked short selling. In this, what happens, that you are not borrowing the shares from your broker, just you are promising that okay, you are going to sell. So you have came into a contract in which you have promised that you will sell the shares. You have promised that you will sell the shares to the investor B. Now today what you have to do, you have to buy the shares at the cheap price to sell the shares at the given rate in the contract. What if the prices do not go down? Now you will have to default in this contract. Okay, the prices actually, you have promised that you will sell the shares for rupees 20, but the prices of the share actually increases to rupees 50 or rupees 100. Now you do not own the share, you have not borrowed the share from the broker, and the prices of the share is increasing, so you cannot buy the share to sell it. So you will default on this contract. So this is naked short selling, when you do not borrow the shares. Okay, so short selling involves the borrowing of the shares, the borrowing of the stock and then selling it, and the buying of the shares when the prices of the shares go down, to return the money, to return the shares to the broker. The shares that you have borrowed, you will return it to the broker. Okay, so this is short selling. In the naked short selling, which refers to the trades where investors sell stocks, they sell the stocks without having already borrowed the stock. So they are not borrowing it. So in the naked short selling, there is high chances of the default happening. That's why the naked short selling has been banned in India. Okay, SEBI said that the institutional investors will have to disclose upfront whether a transaction in shares involves short selling or not. So first of all, For the institutional investors and for the retail investors, the short selling has been permitted. Okay, institutional investors are the big investors that can actually manipulate the market, or they are investing a lot in the market. Let's say the mutual funds that are there, that are the institutional investors. Okay, they take the funds, they pull in the money from different investors and then they invest. So institutional investors are the big investors. The retail investors, they are the like the individuals like you and me. Okay, retail investors are the small investors. So for the institutional investors, if they are going to do a short sell, they have to inform upfront that this transaction is going to be a short sell. The retail investors can inform when the transaction has happened after the closing of the trading day. Okay, so SEBI said that the institutional investors have to disclose upfront whether a transaction in shares involves short selling, while retail investors will have to do so by the end of the day when a trade is made. Now, why this short selling is a focus area right now? Because of the Adani Hindenburg case. In this, Hindenburg has agreed that Hindenburg did the short sale of the Adani shares. What does this mean? That the Hindenburg actually sold the shares which the Hindenburg did not own. Now Hindenburg released a report on Adani, and as soon as the report was released, the Adani shares started plummeting. So the Hindenburg purchased the Adani shares at the lesser price. So you can understand that the Hindenburg sold Adani shares at rupees 2000 and bought the Adani shares when the Adani shares were dropping in price due to the Hindenburg report that was portraying Adani in a negative view. So the prices of the Adani shares decreased to rupees 1000. So Hindenburg was already sold the shares for rupees 2000 and purchased it at rupees 1000. So for per share the profit was rupees 1000. So this is like just an example, but this is the whole of the idea of the Adani Hindenburg case. So the Solicitor General had told the Supreme Court during hearing of the Adani Hindenburg case that the government and the SEBI, they will frame rules to regulate the short selling in India also. So this Hindenburg did the short sale in US. He did not do it in India. He did it in some other country. But now the short selling was in view, was in focus, and that's why it was said that in India we have to regulate the short selling. Okay, because it can be very problematic in a country. The Supreme Court had also asked SEBI to probe if the losses that happened because of the decrease in the price of Adani, because many of the investors like you and me, we let's say we have the shares in Adani and suddenly we see that the shares of Adani is decreasing so fast. So the investor run will happen, the investors will get confused, they will get afraid to hold the Adani shares, they will want to sell the Adani shares at less price also. So the normal investors, they started making losses. So Supreme Court had also asked the SEBI to probe if the losses because of the decrease in price of Adani shares was due to the short selling that Hindenburg was doing, and was because of the Hindenburg report that was released by Hindenburg to do the short selling, to get the decrease in the prices of Adani and to buy the Adani shares at the decreased price, because Hindenburg had already sold the shares of Adani. Okay, so if losses due to short selling in Adani stocks in the wake of the Hindenburg report were in violation, now it has been said that whatever the Hindenburg did, is it in violation of any of the law? So Supreme Court had also asked the SEBI to search that if whatever the Hindenburg did, the short selling that the Hindenburg did, was actually in any violation of any law in our country. So that has to be searched. Okay. So now short selling we have understood. You are borrowing a share from the broker, you are selling the share. Okay. आपने उसको borrow किया, उसको you sold it in the market, आपने उस समय उसको बेच दिया market price पर. अब when the prices are dropping, in the meantime, in the coming days, जब भी उसके price drop हुए, आपने उस share को खरीद लिया. खरीदने के बाद you have to return that share to the broker. Because broker से borrow किया था तो उसको वापस तो करोगे ना. So that is the whole of the idea of the short selling. Borrow करो, बेच दो market price पर, जैसे ही उसका price गिरे खरीद लो और वापस कर दो broker को. That is the short selling, as easy as that. Okay, naked short selling is banned because naked short selling में आप borrow ही नहीं कर रहे हो. ओके तो आपके पास कोई बेसिस नहीं है, कोई बैकअप नहीं है. व्हाट इफ द प्राइसेस डू नॉट गो डाउन और आपने बोरो नहीं किया तो आप डिफॉल्ट कर दोगे. एज इजी एज दैट कि प्राइस नहीं गिर रहे, प्राइस बढ़ रहे हैं तो डिफॉल्ट कर देते हैं कि देते ही नहीं है, सो सेल ही नहीं करेंगे. इवन दो द कॉन्ट्रैक्ट हैज बीन मेड, द प्रॉमिस हैज बीन मेड. सो इन नेकेड शॉर्ट सेलिंग you are actually not borrowing the share, you are just making a promise without any backup. You are making a promise that okay, I will sell the shares for rupees 20. What if instead of prices dropping, the prices start increasing to 100 rupees per share, to 200 rupees per share? You will surely not want to take that much of loss to sell the share at rupees 20. So you will default. So that's why naked short selling is banned, because it has no backup. Okay. Short selling shall be defined as selling a stock which the seller does not own at the time of trade. But short selling means that first you have to borrow the stock, borrow the share, then sell the share at the market price, and at the later on period, like tomorrow, day after tomorrow, you can buy the share, to return the share to the broker from which you have borrowed. All classes of investors, let it be the retail investors, the small individual investors, or the institutional investors, they all can do the short selling. For all of them, the short selling is permitted. The securities traded in the futures and options segment, even these securities are eligible for short selling. SEBI may check and review the list of stocks that are eligible for short selling transactions from time to time. Okay, from time to time they can check. Now, naked short selling shall not be permitted in the Indian securities market. We cannot control the other markets of the other countries, but in the Indian securities market, the naked short selling should not happen, because in this kind of short selling, you are not borrowing. That means you do not have any backup. And accordingly, all investors would be required, like it is compulsory that you cannot default on your promise. If you are selling if you have promised to sell the shares, you have to sell the shares. So investors would be required to mandatorily honor their obligation of delivering the securities at the time of settlement. Okay, so trade is happening today. Today you have promised to sell. Okay, that means the transaction is on trade day and the settlement is maybe happening tomorrow or by the end of the day. So you have to honor your obligation that you have made. That's why you are borrowing the shares, so that you can provide the shares. Okay, you can honor the shares. Now, the stock exchanges shall frame necessary, the National Stock Exchange, the Bombay Stock Exchange, they have to make necessary uniform deterrent provisions so that no investor defaults in the defaults in the transaction. Okay, so deterrent provisions should be there that deter, that stop the investor from defaulting, and take appropriate action against the broker also, that how they allowed the short sale without the borrowing. So the broker has to confirm it that short sale is only happening when the investor, when the short seller has already borrowed the shares, so that the investor has a backup to sell, to complete its promise of selling the share. Okay. So appropriate action will be taken against the broker for the failure to deliver the securities at the time of the settlement, because it is the duty of the broker to actually settle the transaction. Okay, and the broker is the one that is lending the shares to the investor, to the short seller, which shall act as, so this kind of deterrent provision should be there, which shall act as a sufficient deterrent against failure to deliver. Okay. Now, no institutional investor shall be allowed to do day trading. That today only you are, like, day trading means intraday trade, that in the short selling there should not be the intraday trade that should happen by the institutional investors, because on the same day if they are buying, if they are selling, they can affect the market in huge terms. So the short sale should not happen on the intraday trading basis by the institutional investors. So they cannot square off their transactions on the intraday basis. They have to, like, if they are selling today, they have to buy tomorrow or on the coming day. Okay, so to give back the shares that they have borrowed, they will have to buy on the coming day. So they cannot do the square off on the same day. They cannot do the intraday trade on the short sale. Okay, so non-institutional investors should be allowed to do that. Institutional investors, they have to disclose upfront at the time of placement of the order whether the transaction is short sale or not, so that they do not lead to the market volatility. So upfront they have to tell that okay, this transaction is going to be a short sale. For the retail investors, they can do it when the trade has finished. At the end of the trading day, they can inform. So for the retail investors, they would be permitted to make a similar disclosure by the end of the trading hours on the transaction day. So this is the whole framework for the short selling. Now the broker shall be mandated to collect the details on the script wise, on the investment wise, on the security wise short sell positions. They have to collect the details, they have to collate the data, accumulate the data and upload it to the stock exchanges. So they have to collect the details, they have to compile the data, they have to upload it to the stock exchanges before the commencement of the next trading day, before the commencement of the trading on the following trading day. Okay, and the stock exchanges, what they are going to do with this data? So the stock exchanges, they shall then consolidate such information. Stock exchanges, they will consolidate such information and disseminate the same on their website for the information of the public on a weekly basis. Simply क्या हो रहा है कि ब्रोकर्स को बताना है कि शॉर्ट सेल पोजीशंस कितनी थी, ठीक है, अगला ट्रेडिंग डे शुरू होने से पहले उनको सारी इंफॉर्मेशन दे देनी है, ठीक है, बिफोर द कमेंसमेंट ऑफ ट्रेडिंग उनको सारी इंफॉर्मेशन प्रोवाइड कर देनी है स्टॉक एक्सचेंजेस को, पूरा कंपाइल वगैरह कर डेटा को. फिर स्टॉक एक्सचेंजेस क्या करेंगे उस डेटा के साथ? वो कंसोलिडेट करेंगे, क्योंकि अलग अलग ब्रोकर्स हैं, जीरोधा, ग्रो, IND मनी, बहुत सारे अलग अलग ब्रोकर्स हैं. तो अलग अलग ब्रोकर से जो इंफॉर्मेशन आएगी अलग अलग सिक्योरिटीज़ के बारे में, उसको स्टॉक एक्सचेंजेस कंसोलिडेट करेंगे और वीकली बेसिस में वो अपनी वेबसाइट में उसे प्रोवाइड कर देंगे फॉर द पब्लिक, कि पब्लिक को पता हो कि अच्छा इस वाले सिक्योरिटीज़ में बहुत ज़्यादा शॉर्ट सेल हो रही है या नहीं हो रही है. सो दिस इज़ द होल ऑफ द आइडिया. ओके, so the frequency of such disclosure may be reviewed from time to time with the approval of the SEBI. So this is the whole of the idea, that the brokers have to provide the details on the daily basis before the starting of the next trading day. They have to provide the whole of the information regarding the short sell positions with the brokers, and they have to collect the details, they have to collate the data, compile the data, upload it to the stock exchanges. Stock exchanges will disseminate the information, will consolidate the information from different brokers. From different brokers the information is coming to the stock exchanges. They will consolidate it and will disseminate it on the weekly basis on their website. And the frequency of such disclosure may be reviewed from time to time by the SEBI. If SEBI feels that it can happen on the twice in a week, so SEBI might do that. Okay, that SEBI will say to the stock exchanges that do it twice in a week or so. So this is all regarding the short selling framework that has been brought by the SEBI. Okay, now try to give the right answer of this question. If you are able to give the right answer of this question, that means you have got the overall understanding of the short sell. Yes, it can be a little complicated, but you do not have to go too much in depth. Just remember it from the exam point of view, that okay, what are the details that the SEBI has told. So these are the important points that I have shown you in the session. Okay, and remember one more point, that the securities lending and borrowing, there should be a particular scheme, particular process for the securities lending and borrowing. Okay, so that the short sale in the country is happening with the borrowing of the securities. Okay, so this is also something, that the short sale will only happen with the borrowing of the securities. So for that, securities lending and borrowing scheme should be proper. Okay, so this is the whole of the news article and the circular of the SEBI. Try to give the right answer of this question. If you can give the right answer of this question, that means things are clear for you. Okay, now there is a big announcement from EduTap that we have brought for you the comprehensive guide for RBI, NABARD and SEBI, so that through a single guidebook you can get the answers of many of your common queries. If you want to know about the syllabus, if you want to know about the sources from where to prepare, you can get the general idea from these guidebooks. Even if you want to get the previous year questions that are provided with these guidebooks. Okay, so do download these guidebooks, which are absolutely free of cost for you all, and you can download this. The link is provided in the description box below. Now thank you very much. If you have any query, you can comment down below, or you can call us here, you can mail us here. Do give the right answer of the homework question. Thank you very much everyone. Have a good day.